So we're going to talk about the BTM concept and the weekly cycle and how we can effectively trade the weekly cycle using the BTMM concept along with smart money concept to identify fair value gap and order block and change of character and break of structure along with trend line to show that to channel the price. To show that we are maintaining the three levels of rise, the three levels of drop, and when to expect that we are going to head into a reset position where we get a break of the trend line and we clock back into the weekly cycle. So, okay, now the weekly cycle basically consists of we using the moving averages of the using the 13 and the 50 EMA. When the 30 EMA cross below the 50 EMA, that is level 1. So we are in the weekly cycle. So we are in a weekly cycle, which is a level 1, locked in, where 30 EMA cross below the 50 EMA. And for that a downtrend and for a bullish weekly cycle, the 13 EMA cross above the 50 EMA. And all of this is done on the 4-hour chart. To show us the weekly cycle. So the weekly cycle now it starts with a peak formation low to have a bullish reversal cycle. So it starts with a peak. So we look for a double pattern where we look for and we use the ICT concept to show us a break of structure to the downside. And this double pattern, we get a break of structure and a double pattern, we're going to get divergence on the TDI indicator. So now, when the 5 EMA cross the 13 EMA, like right here, that tells us that we have a P formation low locked in. So we wait for a trend line break to shift the cycle along with the 13 EMA crossing above the 50 EMA. That tells us that we are in we shift the cycle, we shift the zone. As Steve Mara would say, we shift the zone. To shift the zone meaning we're shifting a directional bias. So now we will connect the trend line to the highs, the previous week high. This is a previous week high. Up here is a previous week high. So we connect to the previous week high, right? To the extreme previous week high. So right up here is the previous week high. Right here is the previous week high. So we construct a trend line. When we get the break, here we will construct a trend line. So here we construct a trend line. At least 2 touches and we're good. So 1, 2, 3 touches right here. So right here we get the trend line. And we get the trend line break. And now, when we are in a weekly cycle, the weekly pivot point, which is the PP, the central point, right here we have the yellow line, that's the pivot point. So each time the 50 EMA cross, each time the 30 EMA cross the 50 EMA, then we identify where there is the average price. And we want fair value gap to be below in this scenario, bullish reversal cycle. So we use the level 1 concept to identify the weekly cycle. And we wait for a trend line to break. And we can go back, you can back test and go back and you can go back and back test as far as you want. Or you can practice on live or real or demo account to get the idea. This is not my strategy, this is basically I'm interpreting how BTMM work. And his knowledge, and his concept, and his idea, and his philosophy. So basically, the 13 EMA across the 50 EMA, that on the 4-hour chart, that basically give us an idea that we are in a bullish or a bearish weekly cycle, and we can use the trend line to give us a confirmation we have a breakout. And we can use the TDI indicator for divergence And when we have a change in the cycle, the TDI price and signal line will support what the price action you see in our chart. Where, for example, in this case, we have a bullish change of the market maker cycle. So on the TDI, if I will pull up the TDI, let me go for the TDI. If I pull up the TDI, Trader Dynamic Index. So if I pull up the TDI, let me get this right up. So if I pull up the TDI, you can see right here. So if I pull up the TDI, you can see that the TDI price and signal line is above the market baseline. So that shows that we have a shift in the cycle. And when we get a shift in the cycle, we target the midpoint, the resistance one, R1, the midpoint there, and then we target the resistance 2, the midpoint, the resistance 3. In this case right here, we can go back as far as right here where we are below and the pivot right here. And the 13 cross below the 50, so the weekly cycle start here. However, continuation of the weekly cycle. We didn't get a reversal of the weekly cycle, but a continuation, as you can see the trend line hold. So right here now we have a break in the weekly cycle. So now we are shift and we are back into the level 1. And the level 1 will give us a stop on back to the 50 EMA for more buys, unless otherwise. So now, when the weekly cycle, that's why now, for once now you understand the weekly cycle, then you have a better idea and a better control of using the M15 time frame to trade all 3 cycles. Where you have to, you got to learn to trade the intraday cycle. You got to say the weekly cycle. And if you want to trade the monthly cycle, then you would use the same concept but on the daily time frame. Using the pivot to trade the intraday cycle, it's a more the pivot now is not a spanned out with a wider range. So the weekly cycle is better to trade using the pivot. And basically now in BTM concept, it's best to practice on the 4-hour chart or on the daily chart, and you use the pivot. You use the pivot as a guide, because in level 1, when we are locked in a level 1, when we are locked in a level 1, this the mid pivot point, or the PP, which is a pivot point actually. That's where when the 13 EMA cross the 50 EMA, the pivot point normally would be there as the average price. So if you're trading on a daily now and you're doing the daily cycle, if you're trading on a daily cycle and you're doing the monthly cycle, and the monthly cycle would be the same thing where the pivot, where the 13 EMA cross the 50 EMA right at the pivot. If you are doing the intraday, then you will use the 13 EMA cross the 50 on the 8-1 time frame. So now when the 13 cross below the 50 EMA and the TDI price and signal line below the market baseline, then we are expecting to have lower average close, where current days, future days will be closing lower than the previous day, which we will get break of structure to the downside. So when you are incorporating BTMM with SMC, basically SMC, you just want to learn to understand how to identify swing structure, break of structure, swing break of structure, and internal break of structure, and swing change of character and internal change of character, along with identifying order blocks and fair value gap. That's all you need to know. How to identify order block, fair value gap, change of character, and how to identify, and it's key important, you will need how to identify a fake out change of character. In other videos, I will explain how you can identify fake change of character, because fake change of character is actually price inducing traders to go in the opposite direction, and that basically that inducement engineer liquidity and collect liquidity. When that engineering and collecting of liquidity actually create a order block on the higher time frame. And I will go more into that. Peace out for now.